This is Carl with three things to watch for Tuesday, January the 28th. Starting out, we're going to keep an eye on the Chinese economy today. Yesterday, we had that meltdown in tech stocks. That was brought on by some AI changes, some thoughts there in China that we could use AI to manufacture the chips we need for vehicles and computers and everything else. Really shook up that China tech market, the global tech market, really. We saw a big sell off in the NASDAQ yesterday. Was a result of that. The thing is if we can get AI to replicate what these chips do, that's a game changer for the global economy. You got to stop and think that's, not just the chips, but it affects global trade. Also affects, a lot of the minerals and metals that go into those chips are mined. All of a sudden, you've got a mining industry that's in a little bit of upheaval and energy costs and you name it. So that's a big changer, not just for the ag sector, but everything. And you can ask yourself, well, that's the tech. Why did it sell off in the eggs? Well, we've had a lot of managed money come into the egg complex here recently. And once they got a little flighty and jetted from their indice contracts, they bailed out of the eggs too. A little bit of selling in corn and soybeans due to the recent buying, the week longs out. Probably needed some money to cover some margins in the equity market yesterday. Equity market appears to stabilize. Commodities have stabilized as well. Keeping an eye on the Argentine tax development down there. Argentina cutting their export taxes from now until June. So basically on their remaining old crop inventory doesn't look like it's really going to affect their sales or benefit them that much. Farmers really still pushing back. They're more worried about their production of this year's crop and whether they might need some inventory from last year. Really starting to hear a lot of traders downplay the losses in Argentina, but sources in Argentina are standing in saying that maybe the crop's a little worse. Overnight, we started to pick up a little bit more stress in Mato Grosso, Brazil, walking back some yields there too. So things still, I'm not saying they're in dire straits in South America, but we are definitely taking the top end of the crop off. Third thing, the cold storage report from last week showed us that we did see a build in red meat reserves from November into January, or excuse me, November to December. A lot of that is seasonal. Seasonally, we do tend to see our freezers fill a little bit once we get past Thanksgiving and such. Now, though, we're sitting here looking at it and saying, okay, was that really seasonal, or did we see some pushback on consumer demand due to high prices? I think that consumers are pushing back a little bit. High prices do cure high prices in the market, and we're starting to see that. Heavier weights on beef are starting to become a little bit more of a topic. Last week's slaughter showed us that cattle coming in 62 pounds heavier than they were the year before. So that starts to add up and really can make a difference. Not a huge one, but it does take a little bit of the edge off the bullishness in that cattle market. Those are the three things to watch today.